Hi everyone, welcome to today's video. We're going to answer this question. It happens to be the #1 question among all couples and business owners. Will I have enough money to retire? Or a variant of that question, will I outlive my money? How much money do we need during retirement? That kind of thing. But it happens to be the #1 question. So I'm going to ask you, you're watching this video, it's going to be a really quick video. I have 3 slides to show you because that's all it takes to answer this question. And that is this your question as well? If you're working with an advisor, this should be the #1 thing you get done right away. You're going to have a dozen things that you're going to ask an advisor to help you plan for, right? How much money to put in an RSP or TFSA? How do I take money from my business and fund my personal assets? Do I pay down my mortgage or do I put money into an investment? Like all these things are things that you would talk with an advisor about. But the #1 question you want is this the one thing keeps you up at night? Will I have enough money to retire? So let's get into this. I'm going to show you how to get it done. It's so easy to do. It just requires a little bit of thought and some discussion back and forth about what your plans are, but let's get into that. #1 thing, get a financial plan done. 2 out of 10 people actually have written financial plans. They think, oh, it's okay, I've got it in my head, I know exactly how much money I'm going to need during retirement, but it just doesn't work that way. You need to have it written down. It's something you review every single year. And so for instance, in January, one of the things we did was rebalance people's portfolios and redo their financial plans with updated information. With that information, we're able to see, are we on track? Was that financial plan that we did last year, is it still relevant? Because what happens, you make a plan and then you decide to buy a cottage. Or you do a plan and you decide, you know what, we're going to put more money down on the mortgage than we expected. You have to redo the plan a little bit. Not redo it, but just change, update the information. So let's go through this first page. I'm only going to show you 3 pages, remember. 3 slides out of a financial plan that might be 18 pages long. And so these are really the 3 most important slides. It's called retirement options. The first question is, we want $60,000 of annual after-tax income. Can we do it? Is it achievable with what we have today, based on our savings, based on the rate of return, based on our withdrawal rates, all this, and the ages we want to retire? Can we achieve this? And the answer is yes. You can actually have more if you want. You can have $74,000 every single year until age 90. That's important for that couple so they can start thinking about, well, where are we going to live? How much money can we spend? So that question is answered right now. The first question is, yes, you'll have enough money to retire and you'll have more than you think you're going to need. So, I mean, you can sleep at night knowing exactly that question is answered, but let's go into a little bit more. The second question is, would you like to know if you could retire sooner? And the answer to this question is yes, 2 years sooner. So now people are thinking about, I thought I was going to retire at 65, but now I can retire at 63. So now that's a different discussion altogether. The third is, do you need to swing for the fence every single day with your investments to have enough money to retire? So many people want to make the most they can in their portfolios, and why not? Everybody wants more money. But the question is, do you need to put your retirement at risk just to have more money that you're not going to spend? This couple, if you look to the bottom of the page, it says this couple needs $662,000 of a pool of money that's going to produce $60,000 a year for the rest of their life, right? And that pool of money is now the thing that you have to protect, you have to guard. And the question is, if you really don't need to get more money to live, then that means you don't need to take on more risk. So here it's saying you only need to get 3%. Obviously they don't want 3%, but it's giving them reassurance that if there's market corrections, if there's just recessions, that their plan is not in jeopardy at all here. They're getting almost 6% in their plan right now, but they only need 3%, and that's reassurance to them so that they can understand we're not in trouble. When we see all this news and it's bad news with corrections, it's really not affecting their plan and they can sleep better at night. So 3 things now on this 1 page helps them be more secure, lowers your anxiety. It's simple stuff. The 4th one is, how much money do I actually need? And again, it's $662,000 for this couple. They're actually going to have more than that. They're going to have $1 million if they continue at this rate. So what it tells this couple is that there are other planning opportunities they could employ here. They're actually going to have more money than they're actually going to spend during retirement. So what does that tell them? They start thinking about, well, what could I do with our extra money, right? Second page, cash flow. So people want to say, that's nice, it's the top end numbers you're giving me, but show me the cash flow. Well, this couple, that again, if you see red here, that's bad news. There's a problem somewhere you have to fix. But this couple, they're 53 today, and their combined income, they're making more money than their expenses. That gray line that you see going through there, that's their actual lifestyle expenses. And you can see they're spending not as much as they earn, but they're definitely enjoying their lifestyle. They have over $100,000 of combined income. But at retirement, they don't need that much. And obviously, they're not working anymore, so they're going to be living off of their retirement portfolio. Government benefits as well, so CBP, old age security, and then what they have saved. And you see here that gray line drops, and that's their lifestyle expense. Roughly, let's say $5,000 a month. And so they're saying, can we do that? Is that achievable? And you see that extends all the way through to age 90 on the right-hand side. The blue lines going up, bars going across that gray line means they have excess money. That's all it means. And so this is like a great opportunity for this couple because they know they're not going to run out of money. They're actually going to have more than they need. Third thing, let's move on to the third slide. So with this couple, I'm saying to them, look, you're 53 now. You're going to save all this money till another 10 years, and you can retire. And you're going to have your $60,000, no problem. You're going to have $74,000, no problem. But understand that when you're doing all this, your assets are still growing. And so what I want to share with you is that you're actually going to die with assets. You're not going to spend your money. Your money is going to outlive you. So what does that tell this couple? It tells this couple, look to the bottom of this page. We're just going to zero in at the bottom. This says this couple's net worth when the last person dies, right? So usually couples don't die together, but the idea is on the last death, this couple or this person is going to have close to $2 million of net worth. They're going to have to write a check. The estate's going to write a check for about $370,000 to Revenue Canada to pay the tax on their estate. And so what this says to this couple is you are actually going to just give close to $400,000 of your net worth to Revenue Canada at your passing. And how many people want to do that? How many people want to give a gift like that to Revenue Canada when all your life you've been trying to mitigate how much money you give to Revenue Canada? How much money they take from your pocket every single day, every single year, and at the very end of it, the government's going to take $400,000. So that tells this couple one thing. We don't want to do that. We don't like that at all. What can we do about it? So that leads to a whole planning discussion about how we're going to lower the amount of money that you're going to give to Revenue Canada at your passing. This is an important document because why would you want to give so much money away? Wouldn't you want to give that to your kids, to charities, to whomever, but certainly not to Revenue Canada? Let's look at the last slide that I have for you. Everybody of my clients, every one of my clients gets what's called a financial dashboard. This is just a sample dashboard. We update it with your financial plan, and it goes on the top of your financial plan because most people don't want to read 18 pages. So I say, what's important to you? What are the metrics that you're going to measure my effectiveness? You know, the rubber hits the road here. Am I doing the kind of work? Because most people, when they do reviews, they're only looking at rate of return. Okay, we're making money and that's it. No. When you work with a financial plan, you want that person to look at everything, a holistic approach to how to grow your net worth, how to be able to use your money in a tax efficient way, how to be able to pass those assets to your beneficiaries at the time of your passing, and then also not to give so much money to Revenue Canada. That is the purpose of a plan and working with a financial advisor. So everybody gets a financial dashboard. So I'm going to review this really briefly with you and we'll go into this. The top left hand corner is your net worth. We're going to track net worth. Why? Because banks want to know what your net worth is. It's really difficult to get any kind of loans if you don't have good net worth. So we want to increase that net worth. That's my job, is to help you do that. On the top right hand corner is your portfolio. Okay, you want to talk about portfolio returns? It's important, but it's only one tiny thing that we're going to review. So rubber hits the road. How much money is your portfolio returning every single year? And we're going to update this every single year. We'll go down to the bottom. It says portfolio gains. Here is where the rubber hits the road. How much money have I made for you since you gave me your money? Dollar amount, not rate of return, because people say, oh, you've been getting 7%, 5%, 13%, whatever that number is. But translate that to money. How much money has your portfolio gained from my advice? Here it is. That's one measurement of the impact of my advice. The next one is total assets. So many people really don't think of their assets holistically. And you say, well, I have $200,000 in an RSP, but I have $1 million home. And so you say, well, I'm worth 1.2 million, assuming you have no debt. So the idea is, I like to show people exactly how their assets are lined up here. And we can say, you know, you're very home rich right now. You're wealthy with your home, but that home isn't going to help you retire unless you sell it at retirement. So either we increase the other wedges, those other pies, the TFSAs, the non-registered accounts, the RSPs, the passive income streams. If we can increase those things, you can stay in your home throughout retirement. Otherwise, you're going to have to sell it. So it's just some simple logic to help some clients through. On the left, we're tracking debt. So this particular client says, I want you to help me track the debt. I want to help get me some strategies to pay down the debt. And so that's one of the measurements we're going to do here as well. The last two on the bottom are really important. This on the bottom left-hand corner, it's divided into two sections. Let's talk about the right-hand side of that. The first is, how much money do you actually need to have? So people say, how much money do I need to have to retire? Like top end amount. People say over $1 million. In this particular case, would say this is 1.3 million. But you only have 300,000 right now. So it's a visual reminder that these people have some more room, some more work to do here. You're nowhere close to getting to, so don't think about slowing down. Don't think about that you can go buy the Maserati today, because you're not ready for that. So that's the first thing. The second thing on the left-hand side is talking really about how much income is your portfolio going to produce at retirement. So it's not enough just to say you're getting a great rate of return. People say, well, that's 7%. That's a good rate of return. Well, no, really. What does it translate into income to you at retirement? That's what you really want to know. How much money does this portfolio produce right now if I were to retire in it right now? So it's giving you a sense of, working with me, we've been able to move your income up and up and up. That's really important, so you can see how close you are to achieving that goal of retirement. And of course, the last one on the bottom right is time. How close are you actually to retiring? You're 60% there, you're 20% there, you're almost there. It's just a visual reminder to say you're on track, keep going, keep saving, keep working. You're not done yet, but you're close. Everybody gets this. It's nice to review. It's a simple thing that you can review. Instead of going through 18 pages, you can say, this kind of represents 18 pages. And it's a one-pager. It's a super easy thing for me to put together for my clients. And they all love it, because it's an easy way for them to know exactly where they are right now. I hope this answered your question about, will I have enough money to retire? It's not a difficult process. If you like this video, please hit the like button. Please follow. Leave me some comments. All those things are helpful for the algorithm. Again, thanks for watching, and I look forward to seeing you in the next video. Take care.